So I wanted to do a quick lesson on an article I posted, strategies for setting ranges and rebalancing liquidity pairs and yield farming. And I'll do something more extensive on this in the liquidity pool or liquidity pool / yield farming course that I'm working on. But I do want to talk about this because a few people have asked about it. And there are different options here. So, I really believe after teaching for 20 years, what I've learned is that, talking to somebody in a video format and then kind of having them follow along with, text really kind of cements the ideas in their minds, the text and the audio. So I'll create these articles, these brief articles, and then I'll walk you through them on video, and you can kind of see and hear it for yourself, which I think is much more effective than you just reading it, which is kind of the philosophy that I have on learning. So, but when you're dealing with these pairs that you have wherever they are, there are different strategies, and we'll talk about this more specifically. I'd like to start talking about this in the discussion section in the group, and I'll probably post something today about this. What are your strategies for setting up liquidity ranges? Do you have certain strategies? And, there are different strategies that are available. There's a narrow range strategy, which, is where you sort of, go for the high APR, and you try to get those as fast as you possibly can. And you narrow that range so that you're getting a higher APR and so that you're getting fees on more potential price pairs or price points rather. So here you have a higher earnings, and this is just the more risky. This is the riskier version, where you narrow that range strategy, and then the disadvantages that you can incur impermanent loss and have to kind of rebalance over and over. Which when you rebalance over and over, you can incur loss that way for a number of reasons. I do this if I think the pair is really, if I find a pair that's really, really stable, like Sol USDT, Sol USDC, and Sol's doing well and not moving a ton. I'll do this. I'll do a really narrow range if it's not moving a lot, and just collect fees as much as I can. And then when it starts moving a good bit again, I'll open up the range. And so that's one thing you can do. You can also find, rebalancing tools, auto rebalancing tools in some of these liquidity pool tools that I've kind of, researched and looked at and reviewed in videos. So some of these do that, and I'll talk to you about some of those that have automatic rebalancing. It's an effective way to do it. And it saves you money sometimes, but I like to be more hands-on. So I tend to kind of set these up and then start manipulating them, which is, just my personality. So again, narrow range means higher APRs, but it also means the more potential for you having to rebalance, which, whenever you rebalance, that usually means that one of those pairs has been moved completely out. So if you have USDT and Sol, that you might end up with USDT completely, and now you have to buy more Sol at a higher price point than it was before. In some cases, it'll be a lower price point, and you can benefit in those ways. But there is the potential for loss, impermanent loss, and I have a video on this and an article on this at the Defi at this site, at the Defi University site. So check that one out. You can search it and find it. And I'll be doing more on impermanent loss and rebalancing pretty soon. The wide range strategy is where you just kind of open up the range. And this is really, when you don't use concentrated liquidity, when you just do liquidity in general, this is usually where you are. The platform sets up a default range, and that's really wide range. The problem with this wide range, while there is a lower risk of impermanent loss and you're having to rebalance less, the disadvantages are that you're not earning the same kinds of fees because you're opening yourself up to a huge price point or, fluctuation in price points. So there are lots of times when you aren't even collecting fees. As you narrow the price points, you're collecting fees more regularly. So here with the wide range strategy, you're covering more terrain, but you're not getting fees as often. And so the fees are going to be lower. Typically the APY is going to be lower too. And so it's just a safer bet. It's a way to kind of hedge your bets and to kind of have minimum impermanent loss, and to make sure that you're earning, regular fees, and that the APRs are pretty, pretty solid, but they aren't going to, be skyrocketing APRs typically. So this is definitely a less riskier version with a wider range, if that's your personality. And then there's dynamic range strategy, which is adjusting the liquidity range based on the market conditions. And so this is where you're much more hands-on, and you're being more adaptive to what the market does. And there's a potential for higher returns here, but there's definitely going to be a much more, it's much more hands-on, and it requires a lot more of your time, obviously, because you're, rebalancing more often. Well, not really balancing more often, but you're adjusting the range more often. So you are, I guess, in a sense, rebalancing. The disadvantages, again, it requires active management, and it's much more complex too, because you're having to watch the market and assess the market, really regularly, instead of just having this pair sit there and collect fees. There's also, when you have to rebalance at some point, there are, obviously strategies for that too. And so you can look at these and kind of walk yourself through these, and I won't go through it word for word, but there's a threshold rebalancing where you set a price threshold for yourself. There's a time-based rebalancing where you rebalance at regular intervals, and so daily, weekly. And you can see how some of these are going to fit really well with certain personalities. And that's what I see. I see when I talk to people, their strategies tend to kind of are consistent with their personality types typically. So again, the advantage is obviously here, you're getting active liquidity. And so you're getting, your liquidity remains in active range, and you're maximizing your fees, and you're reducing impermanent loss, but transaction costs can start to stack up. And then, timing and risk, you have to kind of assess that and evaluate that. And you can, there are lots of missed opportunities typically when you take this strategy. And then there's volatility-based rebalancing, where you sort of adjust your liquidity position based on the volatility of the asset pair. And this is, again, pretty complex. I mean, these aren't ones that I typically do myself. I think, with these, you really need to have a really high acumen for trading and for the market and for how these coins react. And then, other outside influencing factors that are happening to cause these changes. And so it's a much more complex, almost like day trading to some degree, because you're having to assess all this stuff, all these different criteria. And again, the advantage is, you're adapting to the market conditions, you're optimizing your fees, but it's a really complex approach. And as it says here, there's a potential for over rebalancing. So you can when I've taken these approaches, I've usually not done as well. And it could be because I just don't have the acumen that you need to watch the market. I also have a 1.5-year-old and a 5-year-old. So, that makes it difficult too. So it really just depends on your lifestyle and what you're willing to do and how much time you're willing to put in. And then you can rebalance based on portfolio allocation. So you can have just a fixed allocation, which is, really good for people who are busy, who have, lots of motivation to do well in the market, but don't have all the time to sit and watch the portfolio. You can adjust your target allocation based on market trends. And again, there are lots of disadvantages and advantages to this, but it gives you flexibility. But there again, transaction costs can mount, and then you cannot have the returns that you typically will look for. So look at these and kind of get an idea for where your personality kind of lines up. And part of this is part of this process that you're going through when at whatever level you're at of investor or DeFi enthusiast, whatever you want to call yourself. It's like anything else in life. I mean, eventually you have to kind of come up with your own philosophy. And so, we talked about, I talked about today in a video for Extra Finance about, kind of figuring out what kinds of pairs you want to invest in for the kinds of returns you want. And that's based on your personality and risk tolerance. This, again, these strategies are similar. So, or do you have a personality where you want to sit and watch these? Do you want to have more hands-on? Do you have the time to actually look at the market and watch the market? Or do you want to just find good pairs and let those pairs sit and collect? It just depends on your philosophy and what that philosophy becomes. So be thinking about that, as you're investing, think about what your philosophy is going to be, what's your approach going to be, and what are the rules that you're going to have for yourself, I guess, essentially. Let me know in the comments here. This is a members only video. So let me know here if you, if this was helpful, if it wasn't, maybe what kinds of videos you're hoping to see more of. Do you want to see more like this? Do you want to see more sort of generalized videos about liquidity pools? Do you want to see more about trading bots, about crypto coins? Let me know, because I'm developing a number of levels to the site where there's going to be, sort of an introductory beginning level for people. And then there'll be different levels really based on your expertise. And so there'll be a section pretty soon where, that's for people who are really experienced in liquidity pools. There'll be a section pretty soon for people who are just starting. There'll be a pool or a section for people who are just starting out with just crypto coins. And so I'm going to definitely organize the site pretty soon in that way. But let me know what you want more of so I can start collecting ideas. Do you want more videos on like ranges and rebalancing, more on the kinds of pools you should find, or more on platforms that have good pools? I suspect all of that, but let me know what you think. And I'll be back next week, possibly again this week for another micro lesson. But again, let me know what you think, and let me know what's working and what's not. As always, thanks for supporting, DeFi University and the channel. And I'll talk to you soon.